Hello. 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 Am I audible?
Yeah,
You
you are audible.
Nagendra, hi.
Yeah. Hi. Am I audible?
Yeah, Narendra, Deepika here. You're audible.
Yeah.
Let me just introduction about BeInvest and let me play the video of Jelly Belly.
Okay.
So we'll start the session. Yeah,
Okay.
just give me 5 minutes. People are still joining.
Acha. Okay.
Yeah.
నెల ఇంట్లో బుజ్జి మనం అసలు గుంటుకొని ఆడతాడా అంజలి పెళ్లి నుంచి ఆడిపోలే
అంజలి పెళ్లి ఫిబ్రవరి మార్చా ఫిబ్రవరిలోనే కదా
ఫిబ్రవరి 17
మాకు ఎక్కడ కదా ఎక్కడ కదా
ఫిబ్రవరి నుంచి మార్చి ఏప్రిల్ అదల్లే ఎక్కడ రోజు కూడా
Raman, Pranita, can you please go on mute?
టైం ఏమో కదా 2 నెలలు ఎక్కడికి పోకపోతాం నెలకు ఒకసారిగా పోతాం దివి
Hi, good evening, everyone. Welcome to BeInvest. As you know that I'm Deepika from BeInvest. So today we are going to discuss about Jelly Belly Foods. As you know that already we posted the company overview and key highlights. So today we are discussing about the Jelly Belly Foods investment opportunity in FMB sector. So today we have with Narendra Garu with us, CEO of Jelly Belly Foods. Let me play the video once to understand what is Jelly Belly Foods and what the food chain system. Let me play the video.
దీపిక గారు అదర్స్ ని మ్యూట్ లో పెట్టారు సో
Yeah, definitely. And also, please,
పానీపూరి తిందాం.
పార్క్
yeah, let me share my screen. Is my screen visible? Could you please heads up?
We can
Yeah.
see it.
Yeah. Hello, can I start a video? Is
I think it's
video
better if
audible?
you mute the
Yeah.
other people.
Fine.
There is a lag, I guess.
Deepika, we can't hear audio.
There's a lag in the video, Deepika.
Yeah, just a minute.
Okay, ma'am, give me co-host.
Yeah, Viraj.
Hello, we do get a background noise. Still.
Hi, I'm Narendra, the co-founder of Jelly Belly Foods. In 2018, we set out to set up a new age company that was going to cater to the evolving needs of Indian consumer. In the last 2 years, we have seen tremendous interest. Hi, I'm Narendra, the co-founder of Jelly Belly Foods. In 2018, we set out to set up a new age company that was going to cater to the evolving needs of Indian consumer. In the last 2 years, we have seen tremendous interest in people wanting to eat conscious. Words such as calorie, diet have seen 3x increase in Google Trends. So now we want to capture this momentum and become India's go-to brand for healthy, fresh foods. Our central kitchen is where magic happens, ensuring consistency and quality. We are here to build more than a brand. We are here to bring food revolution. Blending efficiency with culinary excellence. This is a $61 billion market, and compared to 44.5% of US F&B, only 2% of the Indian F&B market is organized. We are here to bridge the gap between Indian brands and the West by investing in what matters the most: product innovation, technology, and a winning team. We know that the Indian palate is hard to change, so what we have done is we have brought global cuisine and given it an Indian twist. The idea here is to bring in 5-star dining experience in a more chilled out and cafe setting. We've created 40 plus proprietary SKUs for all our brands, ranging from sauces to premixes to desserts to breads. All of these are vacuum packed and sent to each of our outlets to ensure that we serve the same quality and the same consistency 365 days. The last 5 years has been a bittersweet journey. We started small in a 200 SFT outlet, doing around 1200 orders a month. To now we are the second largest health food brand in Hyderabad, doing around 37,000 orders a month across 14 different outlets and 3 different brands. We see this only growing in the future. Now with the expert team that we have with proven track record and being one of the first movers in this segment, having 40 plus proprietary SKUs, I think we are best suited to expand across India. So now we are inviting partners to be part of this exhilarating journey where we want to expand to 500 plus outlets nationally and ride this wave of new age food in India. Because with my team of experienced veterans from across the industry and my background in operations and hospitality, we are the dream team to serve up a dream dish.
Yeah, Viraj, are you there? Viraj?
Yeah, ma'am.
Yeah.
Yeah. Narendra sir, it stage is yours. You can go with your pitch.
Hi everybody. Am I audible? I just wanted to check first.
Yes, sir. Yes, sir.
I'll first start with sharing my screen. Just a second. Is the screen audible? I'm sorry, can you see the screen?
Yeah.
Yes, ma'am.
Yeah, sorry.
Okay.
So, hi everybody. I'm Narendra. I'm the founder of Jelly Belly Foods Private Limited. So first, I'll just give a brief of why we are doing what we are doing. So, if you see the F&B market in India, you might have already seen that in each and every place there's a new outlet opening. So there's a lot of interest in people wanting to get into F&B because one thing is that people are not cooking as much as they used to in the house, and now they're ordering out more. And compared to what used to happen prior to COVID, the people who are coming out have increased their frequency. So according to the research, people have increased 25% of their spend on outside F&B. Now, with this thing in our background, if we see the market of US, I think we can compare US because we have very similar structure of policy and democracy and everything. So we normally trail what US does. So in US, if you see, all of the food outlets or the food brands are normally organized. in India, when it comes to organized market, that is people who run with quality, have good setup, infrastructure and team, it's less than 2% actually. It's actually 1.34%. So out of that 1.34%, if you see 80% of them are US brands or outside brands. So if you take in the organized sector, you will come across the names like Subway, you'll come up with a name like KFC, you'll come up with the names like Burger King. All of these are US brands. Recently, there has been some progress in this sector with brands such as Leon's and California Burrito, which are also heavily funded from outside, but they are Indian brands as such. But if you see the opportunity, it's very huge. US may almost 44.5% of the market is organized. So out of every 2 outlets, one is an organized outlet of an organized brand. So there is scope for us to at least reach 50% of that market. And that is where we wanted to play an important role. So if you see the problem with Indian F&B, majority of the Indian F&B is towards a very short-term goal. That is, you invest in F&B and get out of it in 3 or 4 years as soon as you make money. And that has been the traditional mindset of Indian F&B throughout. And due to this mindset, people have not invested much in how to scale up things, how to have a centralized production, how to see food as a business and not as a short-term project. So you have to take care of things like how do you position your brand, what is the marketing strategy you need to adopt to, how do you train and do research and development. All these elements have been missing from the Indian F&B. So that is where we thought there is a missing gap and there is not many players in the market. So we wanted to build a food company, like run it in a way that any other corporate would run a food company. So what is, as you might have seen the video already, so I won't take your time in showing it. But essentially what we are trying to do is we are trying to go with a very scientific approach towards food by investing in infrastructure and team, because these are the backbones on which you can scale any brand. And more so in F&B, because F&Bs are crucially dependent on the team and the infrastructure you have. So what this does is that if you have a good team and infrastructure, you have a better economics. So your margins are higher, up to 50% higher by the model you choose to. And recently there is a wave of only cloud kitchens. I mean, a lot of cloud kitchens are opening. I have been in this industry for, I've seen the worst and the best of this industry. So through my experience, what we have come across is that cloud kitchens on alone cannot survive the market. You need to have brand presence in a physical outlet, because at the end of the day, it's a game of trust when it comes to food. The guy has to see how you are preparing, how you are doing your things, to understand how to, to gain trust of the customer, and he can order from online later. So what we adopted is a hybrid model where we have some brick and mortar stores, we have physical stores, and also have cloud kitchens around it. So this also helps us having better margins. Lastly, we focus heavily on vertical and horizontal integration. So when it comes to supply integration, we make all of our breads, we make all of our sauces in-house. We'll go further also tomorrow by having our own oil production and oil extraction processes. So that's the future. So that is where we see that we will have an advantage in the future when it comes to establishing an Indian brand. A brief of what we have been through. So we started it in 2018. I was working in the government of AP before. And during that time, we started it as a pet project. We wanted to test the concept of eating healthy. So essentially our brand 100 was the first one. We wanted to see that there is no alternative for Subway in the market, and we wanted to position ourselves there. So that is where we started with this concept. In 2019, we got good traction. We started to see revenue tick in our project. So at that point of time, I thought of leaving my job and joining this full time. So after that, as soon as we joined, we had Corona. I joined in December 2019, full time on this thing. And by March 2020, we had Corona. We had a very bad time during the 6 months, but it's also a boon in bane, because after Corona, people have started eating conscious. Brands that we have seen tremendous growth, and since that day we have not stopped growing. So this is just again a snapshot of what we are doing. So we were doing 1,200 orders in 2019. Now we do around 37,000 plus orders in 2024. So that's around close to 30x growth in 4 years. So just in the last Jan to September, we've grown 3x, and since September to now, we have already grown one more x. So we are closing at 4x growth in a year. So as I was talking about the margin model before, if you see, this is essentially how a cloud model will work on. The cloud model, if you see, it has only 5% of EBITDA margin, because all the other costs, majority of it will go into commissions, which is a huge chunk. So you can't rely on this 5%, because at any point when you have a sale dip or a sale increase or any other externality, you lose that 5%. So that is something that we can't rely heavily on. So multi-brand is where we come at. So in cloud model also, what we do is we have multiple brands. We just don't operate on one brand. And the key criteria of our success is that all our brands are 4.1 and 4.3 rated, above 4.3. So we are in the top 99 percentile. We are in the top 99 percentile. So that allows us to have more revenues from the same place. So we have multi-brand running from the same place, which enhances your bottom line or your EBITDA to 15%. This is the multi-brand cloud model, which is being followed by bigger brands such as Cure Foods and Rebel Foods. So what we have done is we have done one step further. We've also invested in physical brick and mortar stores. Now, Rebel Foods, which is a unicorn company, it has now realized that this is the model to go with, and recently they've opened their first physical outlet. We have been doing this model for close to 2 years now. What happens in this is that when you have a physical outlet, though you have capex on the front end and maintenance, your commission, which is essentially 25%, you save that commission, and that actually translates into your bottom line. And once you have a physical outlet, you can also run multiple cloud kitchens from there. So this is a better model that what we realized is the future, and we have been doing that since. So ours is a traditional hub and spoke model. We have a central kitchen and have a central warehouse. Central kitchen and central warehouse send inputs to the outlet. So central kitchen essentially does the base gravies, desserts, pre-cooked meats and everything, so that the amount of work at outlet decreases by at least 50%. So what we do is that we pre-cook things and send it to the outlet from our central kitchen. And central warehouse, we gather all the supplies demand of the outlets, procure it centrally, so that we have higher negotiation power and more margins when you are purchasing wholesale. So this both actually add to our consistency and our good outlet margins. So you might have seen in the video, this is actually the central kitchen that we were talking about in the video. It is one of the only three audit compliant kitchens in Hyderabad. And the other two are already one of the biggest players that have turnover over 200 crores. So we've built it from scratch. It has a capacity of 10,000 kilos or 10,000 packs per day production. So on an average, you can feed 30,000 people from this kitchen. So this is now has opened in the last year itself, last financial year. And the future is to give more work to this central production facility. So that's what we are now talking about. Expansion and giving more work to the central kitchen facility. Again, in the video, you might have seen these are some of the items that we directly do. These are some of the sauces that we do. we also do our own premixes, our own marinated meats. We do our own breads. We bake desserts. We can also supply to other stores and other B2B clients, but we have not done that because we don't want to focus anything except on our brands right of now. Coming to the team, I'm the founder, and I've done my engineering from BITS Pilani, and I've done my MBA from ISB in 2017. I've also been given a Torchbearer Award by ISB community for my services to the school. And post that, I've been working with the government of AP in the erstwhile capital of Amravati. I was the project lead for the smart city components of it. So I've been doing projects at scale. I used to manage a portfolio of 1200 CR across the city with different companies and different stakeholders. So scale is something that I've been accustomed to through my all through my career. That is something I bring to the table. And I'm also a Six Sigma black belt holder, which helps me in fine tuning my operations. And coming to the culinary side, Anish Pandey, he was the ex-executive chef of the company called Rebel Foods. It's a unicorn F&B company. He has joined us since last year, and he is the person who has driven the menu and the new age aspects of the food in our company. Apart from the main team, me and Anish, we have other people in the managerial segment who are the first managers of brands such as Subway, Creamstone. There are also people who have worked for Swiggy. There are people who have worked for makers of milkshake. So we have a very stacked team. It's a perfect team, as I would say, for this kind of a company. So I'll talk just a brief about what brands we presently run. So if you see, 100 Courtyard and Gourmet Shawarma are our present brands that we run. We've acquired Seal, which is a dessert bar brand. It's a premium bread supplier to Qmart and other high-end outlets. It also does a lot of premium cake segment for birthdays and other things. So we've acquired them. In the future, we are coming up with a burgers and wings brand called Wingmaster. Apart from this, recently we have also completed our research and development on bowls, healthy food bowls, healthy rice bowls, something similar to what boho bowls or California burrito does. So essentially, we always do our R&D. This is one of the main things that we do. So once we do the R&D, we finalize the product, we take out a brand out of it and run it from the central and run it from the kitchens we already have. A brief about each of the brands that we have. 100 is the first brand that we started with. As of now, it's the second largest health food brand from Hyderabad. And we are the largest seller of fresh fruit juices in Hyderabad. So this is the first brand that we come up with, and it's also the flagship brand. Close to 50% of the revenues come from 100. So this is a typical store of 100. This is we've recently got an award for most admired health food brand. That's about 100. And this is Courtyard. Courtyard is a new brand that we launched again. It's a premium cafe. It is alternative to Starbucks. What we are trying to do is we want to replace Starbucks in third waves and provide customers with an alternative of sugar and coffee. We also have juices and healthy salads. So this is again in the premium segment. It's a full-fledged store. Within the first year itself, we have got numerous awards for it. We've been recognized as one of the best cafes in the South India for Hyderabad region. We've been covered in all the popular newspapers. We also have frequent fans who have in the celebrity circle who come to us often. So the third brand is Gourmet Shawarma. This is again one of the brands that we have acquired from. As of now, it's again one of the highest rated shawarma brand in Hyderabad. It is one of the fastest growing segment of our complete portfolio. We are growing around 70% month on month. We started with 7.5 lakhs in the month of January, and now we are close to 30 lakhs. So every month we are almost doubling. Again, Seal is, as I was saying, is a premium B2B seller for breads to Qmart. It also has a high profile clientele for birthday cakes and desserts. So this is something we are going to expand in the future, in the coming future. If you see, if you want to understand what we are, then you have to look at who we are competing against. So these are the two brands that we are competing against. One is Rebel Foods. Their business model is that they only have online presence. Recently, they have pivoted to hybrid model, but until now, they only had online presence. They create their brands. Again, they're similar to us. They create their own brands and they do R&D. The only difference is that we have also one more checkpoint of rating. Rebel Foods average rating of brands is 3.7. Our average food rating is 4.3. So that is where we are trying to maintain that quality and come offer a better experience. Again, the second one is Cure Foods. This is again a recent brand that is fast growing. It's heavily funded. It's from the founders of Flipkart. They have their approach is that they don't make brands in-house, but they acquire brands. They have a huge kitty of money. What they do is they go to good companies, good brands in the smaller stages, acquire them and integrate it into their central kitchen. So these two are the competitors of us. As I was saying, some of the things that we do differently from the competitors is that we have almost all of that production we try to maintain only in-house. If you see other competitors like Rebel Foods and Cure Foods, they have contractors, subcontractors who do the items. Sorry? Hello?
Narendra garu, actually, there is a disturbance background. You can continue.
Okay. In-house production is where we are different. So other competitors, they have contractors who actually supply the items, but we do the in-house production. And again, our model, we are not the better margin model. We have more online and offline presence and also multi-brand concept. Second thing is that standalone strength. As I was telling, the average brand rating, tomorrow if something happens to one brand, the other brand should not suffer. And on each of these brands on their own have to make money is what our main philosophy is. For that, each of the brands on their own should be rated well and should be doing good revenues. So that is what we are focused in. That is something that we are proud about when compared to competitors. And the fourth thing is that as we are continuously researching, we look for segments that are high growth. We look to be present in that segment, churn out a brand so that in future, we don't need to just depend on the brands that we are existing, but we also update ourselves with the market. As a future growth plan, I was saying this is for the coming financial year. We are 14 stores now, and as we are speaking, we are opening 6 more. So by year end, financial year in 2025, we want to have 50 stores under operation. This will be in Hyderabad and in Bangalore. We are opening our first store in Bangalore next month. So we'll be opening around 7 to 8 stores over there and around 40 to 42 stores in Hyderabad. Also, as I was saying, we wanted to integrate more into the supply chain. We want to do our own production of oils as well, which will reduce our costs further. By 2025 financial year, we want to have a revenue run rate of 36 CR, average revenue run rate of 36 CR. That is close to 3 CR per month revenues. Presently, we are at 1.1. Fourth one is technology development. We want to integrate the complete ordering system and automate it. We are developing an app for that, where the manager at any store or the central kitchen guy doesn't need to look for what is the order. Everything is online. The guy from the store places an order. Across all the stores, all the demand comes together to the central kitchen guy. He, at a broad level, sees what are the items that he needs to do today so that he can supply tomorrow. So there's complete clarity on everybody when we expand. So that is the main thing when it comes to technology development. So presently what we are looking for is 5.5 CR. Out of this 2.5, there's already commitment. We're looking for the balance 3 CR at a 45 CR valuation. This is a broad breakup of what we will be doing with the funds. If you see, 1.5 CR is earmarked for store expansion. 60 lakhs is for central production, central kitchen production and expansion. 1 crore we put it as a runway for our future. Marketing, we are putting 1 crore for marketing. And there's an acquisition which is going to be, if it goes through, one of the biggest acquisitions in Hyderabad. So that is something we'll talk about in the next slide. So we are also in process to acquire Farm Bowl, which is a Urban Kisan company where Samantha is the brand ambassador and also an investor. So we are in the final stages of ironing out the deal. If the deal comes through, we will become the largest health food brand in Hyderabad with more than 25% market share. We
Can you please go through the last slide once again?
Yeah.
Okay. Okay, please continue.
Yeah. So as I was saying, this is the big thing that we wanted to reveal at the last. We're in the final stages of closing this deal, and just for that, actually, we had earmarked an acquisition cost of 1.2 CR. This is a cash and equity deal where we will be giving equity to the Urban Kisan company from our company and making a cash transaction of 1.2. So if that secures, we'll be acquiring them. Along with the brand, we'll also get Samantha's marketing for the next year. So we'll be using it for expansion of Farm Bowl. Once Farm Bowl comes into our ambit, immediately we'll have 8 outlets that they already run. And we'll be integrating our 100 outlets in the Farm Bowl and opening 100 in all the Farm Bowl outlets. And wherever we have 100, we'll be opening Farm Bowl outlets. So by this way itself, we'll be adding another 15 to 20 outlets immediately. And they already have a revenue.
But what will be the brand name visible outside?
No, both of them will exist independently. Even in the store, there will be 100 segment and there will be Farm Bowl segment.
No, that is inside. What about outside?
Outside also. Outside also we'll be having 2 names, 100 and Farm Bowl, both will have their own boards.
Okay.
It will be like a integrated outlet where people can choose to eat from 100 Farm Bowl or any of our other brands. That is the integrated model that we're going for. So tomorrow we might become a food court kind of a setup in itself. We are our own food court. So that is the thing. Anyways, so coming back to this acquisition, if it goes through, we'll become the biggest health food brand, and also a lot of Farm Bowl being a brand that is run by Urban Kisan. Urban Kisan actually is into farming and they make their own lettuce. It's almost half the price at which we procure it. So if we acquire Farm Bowl, we'll also be getting their produce of lettuce, which will increase our profit margins by decreasing the cost of all these high value items such as lettuce, bell peppers. These are all things that Urban Kisan grows. So post 2025, we also have a plan. We already earmarked everything for it. This is a 60 crore budget plan after 2025. wherein we want to expand across the state, across the country. Also get into, apart from fresh food, we want to also get into packed food by having 10 production facilities. And by 2028, we want to be a company that has 400 crores in revenue and be ready for IPO. So that's it, guys. That's what Jelly Belly Foods is, and that's what we've been doing. I think I'm now open to any questions that anybody has, so I'll take it now.
Can you repeat the last slide, please?
Yep.
So Narendra, you told you're planning to acquire Fresh Float, right? So what is the current market capital? I mean,
Sorry, what is the current market?
market size of the business.
So they currently do around 35 lakhs of business per month. So we'll be acquiring them at a valuation of 8 CR, of which we'll be taking 60% of their company. They will hold 40%. They still want to hold 40%. So that comes to around 4.8 CR as a deal value. In that 4.8 CR, 3.6 CR is coming as a equity swap. We'll be giving our equity to them. And rest 1.2 is a commitment that we make to the Urban Kisan people that will use it for expansion of Farm Bowl. So those are the specifics of the deal.
As of now, what is the financial stability of the Urban Kisan company? I think it is a flop model, right?
It is so Urban Kisan, as of now, they are planning to raise another fresh round of equity, fresh round of funding. With their already they have very big investors on their cap table. They are planning to raise another round, but since they are more, as you said, they're more focused on the farm side. Their investors want them to get out of any other aspect other than farms. So they have to spin out this Farm Bowl and give it to somebody else. When that came into picture, they approached us and they said that we want.
Because it is on losses or what? That
Which
is why
one?
they want to hand over to someone else. The
No,
Farm Bowl.
So Farm Bowl as an entity within them is not profitable, but they also don't have a big loss. They have around 2.5 lakhs to 3 lakhs of loss on their books for the 32 lakhs of revenue that they do. But that is because they have a huge setup for central kitchen and their central team. So what we are doing is that once we acquire them, we will not need their central kitchen team and their central kitchen facility, because we have our own team and facility. So that overhead gets out of it and we acquire it completely. So once that happens, that cost head goes away and it becomes profitable. The main reason that we are trying to do this is because this opens up a avenue for us to open 800 outlets from on the Farm Bowl side and open 8 Farm Bowl outlets at 100 side with no additional capex. So that at least we are seeing our revenue uptick of up to 60 lakhs.
Okay, you are acquiring their stakes, but to avoid capital expenditure, right?
It works.
Reduce your capital expenditure.
Yeah. So it works well for us because we don't need to develop those revenues. They're already developed revenues. And since we have 8 more outlets to start our 100, which is very easy for us. We just go there. We don't need any additional equipments because the menu of 100 and Farm Bowl is very similar. We'll be needing only additional fruit-based equipment, that is fruit juicer and a fruit stall. So apart from that, the same manpower we'll use, the same overhead we use, we'll pay the same rentals and sell more items from there. So even for them, they don't have any other option to sell outside of us, under any other good option to sell outside us, because what happens is that this kind of a facility, 100 is very similar to the menu that Farm Bowl has. So the model that I said, where we don't need to have their central kitchen and the central overheads, and once we acquire it, we'll be profitable. That model is only possible with someone like us, and there are not many people in the market like that.
Hello.
Yeah.
Yeah, sorry, I joined late. Can you explain how the returns are generated for this, and when will we get our returns and principal, and what is the minimum investment?
It is an equity game. So what we are looking at a horizon of 2 years. We are looking at a horizon of 2 years where presently our valuation is 45 CR. We'll be once we integrate, we do all the things that we've explained in the presentation. We'll be reaching a revenues of 36 CR. And by next year end, we also have revenue potential to reach 86 CR. At that point of time, we'll be having a EBITDA margin of 12 to 15%. That's around 9 to 10 crores, let's say, per year. So this will be the profit margin that we'll be having at the end of next year. So for that to happen, we need to focus in this section and then take it to that point. At by 2028, when we reach our full potential of 400 CR, we will be having a profit margin of 15 to 18%. So that is where we eventually want to go. In the meanwhile, there are two options. In 2025, 2026, we've also been approached by Cure Foods, our competitor, that they are going to acquire us. But since we are too small now and we are also going faster, we didn't go ahead with them and we said no to them. At any point of time in the future, by next year end, we'll be looking at a value of the company somewhere around 140 to 160 CR. By 2025 end, we'll be looking at a value of 140 to 160 CR. At that point of time, we can become an acquisition target again if we want to. But if we see that we are still growing faster, there is still a lot of things, we can also wait and go to IPO.
Okay, till then there will be no returns and no fixed return.
I don't think we'll be giving out dividends in the next year itself. Next year, though, we'll not be giving dividends in this coming financial year. But after that, if there is substantial windfall gains that we get, we'll be giving dividends to all the partners. So because
but there are no fixed returns, right?
Sorry?
But there are no fixed returns, right?
There is no fixed returns. No. This is a complete, you're investing in the company. If you are willing to exit, there will be exits possible in secondaries. You can sell it off to somebody else. But from the company side, until we reach a particular point of time, which is something essentially what we're trying to do is every of our investors should get at least 3 to 4x of exit is what we're trying for. So if we are not...
Will we be getting any equity shares like unlisted shares?
Yeah, you will be getting equity shares. So yeah, that's what. You'll be getting equity shares at a 45 CR valuation to the amount that you invest.
Okay, thank you.
Can you please explain the exit policy?
So exit, as I was telling, there are two, if I talk about it, there are two steps of exit. One exit is a long-term exit. When we go for IPO, that will be a very big exit. If not, we are already an acquisition target to Cure Foods. They've approached us already twice. But at this point of time, I don't see value in giving it away to them. So I want to exit at least a 150 to 160 CR valuation. So until we reach revenues of around 40 to 50 CR, which will be next year end, so 2025 December, we will again consider whether we want to sell it off or we want to continue and become a bigger company. The 2 exits available is, again, we'll talk only in December 2025 about it. Because that is when we see that our revenues will reach a potential to get a sizable good exit. So some people coming in this round, they could possibly look at an exit of somewhere around 2x to 3x minimum.
So before that, it is not possible to get exit.
No, it's hardly, I think it is almost just 20 months away. Within 20 months, I don't think we'll be in a position to go for an exit.
So it
Because
would be locking period for exit, right? 20 months.
our lock-in period, matlab, it will be in the company level. We would not suggest anybody to have an exit, but there will be secondary shares allowed. Somebody is interested in buying your shares, you can inform the company. If somebody is in between wants to buy a secondary share from somebody, we'll also tell all the shareholders that there is a secondary buyer. If you want to sell, you can sell it to him. That's between you and the secondary buyer. Company doesn't get into the exit. We will be at any point of time, we will be informing the present valuation. We will tell the shareholders that today the valuation of our company is this much. So depending on that, you can negotiate a deal with your secondary buyer.
Okay,
Company
so
exit will be at the end of next year only, starting.
yeah. So it is going to be get registered into the equity, right?
Yeah. You'll be getting equity shares within a week time. Once we receive the funds, within a week of time.
What is the present value of those shares, sir?
So presently they are valued at around 800 rupees per share. 788 something odd. So round figure around 800 rupees per share. So that is it's a complete valuated certificate. So depending on that valuation, you'll be getting the shares. Depending on your the amount that you'll be getting that shares.
Yeah, and what was the value, sir, at the time of you started this? No, that time I mean to say, initial stages.
So in I'll tell you, 2021, our valuation was 5 CR. 2023 last year, it was 17 CR. That was the last round that we raised. Now it is 45 CR.
Yeah, sure. Thank you.
So do you see any investors dropped in the past 2 years? Like whoever has participated in the initial stage?
Did I see investors what?
No. So you have told like last year you have raised the fund, right?
Yeah.
Is there any investors who have dropped out or said?
No. There is no, not yet. There are people who want to buy secondaries, but not people who want to sell their shares. So from the promise that we made last year, we exceeded that promise. So I don't think people are in that, because nobody has at least come to me saying that I'm looking for an exit. See guys, what we've always been so far, touchwood, we have never underplayed our targets. We already overachieved our targets every time. So I'm hoping once we start not achieving our targets, only then people will be interested in selling out their shares.
Can you have the registration details of your company, document kind of things?
Sorry?
Registration evidence in equities.
Yeah, that is there. We'll share it.
Thanks.
Yeah, hi. This is your share value is you are telling is 800 rupees. It is a book value or face value?
No, not face value. It's a book value.
Book value.
Face value, all of them are 10 rupees only.
Hello, sir. Having said that, your per equity price is around 700 plus. So if you are planning, as you said, you are planning to go for IPO. So what is that you are planning for IPO price?
Before IPO, what we are doing, because now, as you see, actually the share value per share is going high. So in the near future, before we go to IPO, we will be having several stock splits, 1:10 stock splits. Our target price for IPO would be around 200 to 300 only. I mean, you might have more shares because of the stock split, but yeah, as you said, we don't want to have a very high price for IPO. Is that what you are asking? Sorry, I didn't get the question right, I guess.
Correct. Yeah, I got the answer. Yes.
Hi, sir. May I
Hi.
know the minimum amount of investment?
Minimum amount of investment, I think Mr. Viraj can.
It will be from 5 lakhs. It will be 5 multiple.
Okay.
Narendra, can we know like any key investors in your business the past 4 years or 5 who has invested?
Are you from Hyderabad, sir?
Yeah.
Do you know this brand called Broadway?
Broadway company?
Broadway Brewery. 10 Downing Street, 10D.
Yeah.
So those are all investors in the company.
Okay.
Hi Naren, what is the minimum locking period once we invest in this?
Sir, there is no specified lock-in period, sir, but I would suggest around 18 months.
18 months would be 1.5 close.
Yeah. I mean, that is from our side, but if somebody is willing to buy, as I said, you can sell it off to them. Our that we are promising from the investor side is 18 months down the line.
What is the expected return at the end of 18 months?
You can expect somewhere at least 2 to 3 x of exit in 18 months. If everything goes well, I would not want to promise anything above that, but it can go above that.
If we wait up to IPO?
IPO, it would be, if you're waiting for IPO, it would be a very good exit. I can't promise anything, but it is definitely going to be, I'm hoping it will make you very rich.
So will the shares be dematerialized in the demat account directly or physical shares?
No, dematerialized.
Farm ball is related to what products?
Farm Bowl is also in a similar category, sir. It is in the health food segment only. They delve into salads and rice bowls.
Okay.
Sir, just to know, what are the risks? Having said that, profits is there, risks also will be associated, right? What are the risks that you are expecting?
Sir, the risks of the business that we are in, the major risks that we look for is something like Swiggy and Zomato stopping working, because we have sizable amount of revenues coming from online. That would be a risk. Any thing related to that. A risk, I would not say risk, but a point of contention would be people with bigger money coming into the picture, someone like a very big guy coming into the picture and establishing something similar. That is a risk, again, a competitor risk. That is a risk that we have. Apart from that, from a operational perspective, the risk that we see is manpower. That is where we are trying to integrate everything at the central kitchen so that the manpower at the final outlet would not have to have a lot of skills. So these are the 3 main risks I look into when I see my business.
Okay. Okay, sir. Thank you. But the third risk.
Sorry?
What is the minimum amount to invest?
I think 5 is what I think they said. 5 lakhs.
5 lakh?
Yeah.
Okay.
Narendra, can you show the previous slide which are like different segments like a government shawarma? And all those
Okay,
things?
sure. Yes.
So as you know, like food business is more like risky to keep up with the customer preference,
Yeah.
and along with I mean, there is a chances of losing customers if it is not up to the mark with the customers. So how we are going to mitigate? So as there are pipelines in your series, like planning to acquire few things actually. So some may click or some may not click actually. So in those scenarios, how you are planning to mitigate the challenges?
There are two ways that in food business we have, as you said, you pointed rightly the issues that a food brand has, that there is a thing where people get tired of the brand. And there is a second thing that we lose consistency. So what we are trying to do is that we want to be, as you see, if you see our present portfolio, we are trying to be present in wherever there is a good growth segment. So we have to consistently be at the cutting edge of understanding the market and where the market is going. So how we are trying to mitigate that is to have one of our brands in each of these growing segments. Let's say tomorrow we lose one segment, we should not be in a position to not have we have a major setback to us. That is one thing. Second thing, when it comes to brand fatigue, is that we want to ensure that we have multiple options in the same segment. Now, let's say 100N is there, we'll be having Farm Bowl, which is in the similar segment. So we'll be having items in the similar segment, so that even though brand fatigue is only related to the brand that you see and everything, people do order similar food. Food doesn't change, only that the person gets tired of one particular preparation and one particular brand design. But he'll anyway, suppose somebody wants to eat a biryani, he'll always eat biryani, but from a little different taste. So we want to have multiple brands also in the similar segment. So we want to have that risk diversification.
But they, at the same time, like the revenue can split it, right? So across the segments. So
sorry, your voice cut out, sir.
So at the same time, the parallelly, the revenue also will be splitted over it according to.
I would say in our model, that's something that is good about our model, is that when we split things, right, we don't split the capex cost and the operational cost. We only split we split it in two different places, but the backend manpower in the outlet will be the same people. We'll be paying the same rent. So if you say I was doing 30,000 on 100N and I was doing 20,000 in Farm Bowl, when they come together, what happens is that I would probably, as you said, I might not have 30 plus 20. I might have 25 plus 15. It's coming to 40K instead of 50K together. But what happens mainly, sir, is that you don't have additional rent and manpower cost. If you're operating it separately, you will have additional manpower and additional rent. That won't be there in our integrated model. That is how we make more money.
Okay. So who are the suppliers for your company? Like, are you dealing with directly with the manufacturers or like any intermediate?
We do deal with the distributors, sir. We are not dealing with the manufacturers as of now. We do deal with the distributors of the place. I mean, we get our Milky Mist distributor or Sneha chicken distributor, or Tarkari is a vegetable distribution, fruits distribution. So we're at the distributor level as of now. Probably if we grow more revenues, we can go to the direct manufacturer level.
So process to get into this investment. So do we need to contact you or some other person?
You can contact Mr. Viraj, sir.
So BeInvest will take care of the investment part.
Hi, sir. Suraj here.
Yeah, hi, Suraj.
Yeah, sir, I have two queries. Operationally, your presentation was very fine, and I like the confidence you have in your voice. That itself is very much visible.
Thank you.
Thank you. And sir, I have a query regarding the type of shares which I'll be holding, because as many people might recollect, people had a slight bad experience because of some compulsory acquisition which a very big brand has done recently in the unlisted space.
Mm-hmm.
So, sir, the shares which I'll be getting from you once I invest, will it have any ROFR condition attached?
ROFR condition attached, nothing. These are simple stock shares.
Okay.
As of now, they don't have any ROFR conditions or any conditions attached to it, because we don't have any present acquisition in line.
Okay. Okay. And what will be the protection I'll have, sir? I'm very optimistic. So let's say the company grows very big, and will there be any chance where you'll acquire my shares with compulsion?
With compulsion, I don't think so, sir. I can, but definitely, because if you see what the shares that we are giving, we are not allotting any preferential shares even to me. Even in my company, I don't have any preferential share. I have simple stock equity that like anybody else has. So we are not going into a place where I have a different kind of a treatment and you have a different kind of a treatment.
Okay, so you mean to say there are no DVRs or any excess voting rights?
No.
Okay, okay. Sure, sir. Thank you.
Yeah.
So
And
Narendra,
if anyone interested to invest in this company, form link chat box నిచ్చా form fill చేస్తే మా టీం get back అవుతారు ప్రాసెస్ గురించి మనం డిస్కస్ చేసుకోవచ్చు సో 1-on-1 call.
So what is the assurance you are giving in terms of investment security?
From our side, investment security assurance, sir, we're already in a mature company. Investment security, I think probably Viraj can help you over there. What kind of assurances that we can give? But from the company side, we're anyways growing. The assurances that I can tell you is that we have gotten a couple of acquisition offers. So I think as of now we have good traction to not lose money.
Okay.
Yeah. From our company side, the assurances is the work that we do and the work that we have done so far. So apart from that, as I said, December 2025 is when we'll talk about whether we want to get acquired by the bigger company. But up until then, we want to focus, keep our heads down, focus on the growth.
So Narendra, you told a couple of times the company has tried to acquire it. It's a Pure Foods or some other?
Pure Foods.
So as an investor, you have covered all the most of the positive terms. Like I want to like to know, is there any compliance issues, like any regulator issues from your company side? Like past 5 years, you have been in the food business market, right? So any challenges or any complaints from the
Sir, if you ask me any compliances, sometime early last year, probably we had a GST delay. That's the maximum compliance thing we had. Due to some cash flow issue and some confusion between Swiggy and Zomato, we had delays in paying our GSTs. So that is the compliance thing as I can see. I don't remember any other bigger compliance issues that we have.
So do your company paid any penalty or a fine to the regulator? regarding this issue?
No, we didn't pay any fine, sir. We paid delayed charges, but we didn't pay any fine. They didn't do anything that we voluntarily paid the delay charges and paid became updated. It was nothing that GST has come to us or anything, but was a small problem. I'm telling you because I have to be very open. So that was the only minor compliance issue that we had. We didn't pay any fines for it. We paid delay charges. That's a complete automatic generated thing. If you go to the GST portal, the number of days that you've delayed, it will automatically calculate and tell you this is the delay charge.
Hi Narendra, this is Virendra.
Yeah.
Narendra, like I've been gone through the session. Okay. See, I think in the initial the slide you have been compared with the US market. That
Yeah.
is how we have a lot of scope to fetch into the market. That is what I hear.
Yeah.
Okay. Yeah, that's whatever you said that it's a true, but North American market is a different market because North American market has scope of because their way of taking the food and having the diet sensations and that would be more different to the North American side. But coming to the coming to the India side, you said that healthy food. See, this is a long market, but see, I say that I don't hesitate to say that it's a even a 2% is the market who knows what is healthy food. Okay,
no,
remaining 98% not
sorry.
we know that.
No, sorry, sir. So the number that we are indicating here is the total F&B market. It's not just health food market, sir. The total F&B market, you take KFCs, you take Burger Kings, you take Subways, everybody, all of them, what I'm trying to tell in this slide is that, see, as you said, you rightly said that US is a different market. If you see why, this is the slide is about organized market, that is brands in F&B. So in US, every second outlet is a branded outlet. In India, out of 900 outlets, only 2 will be branded. That is coming from someone like KFC or Subway who have brands. So now people in India, our incomes are growing, our aspirations are growing. We would want to associate with trust and brands going forward. So that's why we would more want to gravitate towards having food in a branded outlet. But as of now, if you see, the market is very less, is what I said. That was what my meaning.
That's true. That's true. I'm also quoting the same line. See, that takes a time because that takes a time.
Sure.
That takes a time in people as well. Okay, to educate themselves like how the market would be.
True.
In this meantime, how viable of this solution? I'm thinking over that. How viable? Because see, US market, why it is more health conscious or more food conscious, that is a different. And because their the income of source would be the double. Okay, comparing to the INR.
Okay.
Yeah, there would be 2 guys would be in the home. If you considered one home, it would be 2 guys working and they would be having a busy schedule. Based on that, they'll have go the same proper healthy diet. They want to get it from the outlets.
True. That is true, sir. So over here, only one thing I'd want to say here, sir, ki, what you said is right, that there is a difference in purchasing power and everything. But sir, if we are going this way of having a branded outlet or having a company which has back-end infrastructure and team, at the business level also, it becomes very lucrative for us, sir. So somebody who wants to put a 100 competitor tomorrow, he can't put that outlet as on himself because I procure around 1 ton to 1.2 tons of material and I store it at one point and I every day purchase at that scale and I process everything in the central kitchen. So because of which if I'm selling a juice at X amount, it will be very competitive and very high quality. When somebody else is doing, he has to charge at least X plus maybe 10%. So having a infrastructure and team in backend will allow you to supply at a lesser cost. Your food cost will come lower, and you have a longevity and you have consistency in taste. So for example, in our central kitchen, to all the outlets, sir, the central kitchen itself is the place where the meat get cooked. So we cook the chicken every day. We blast freeze it, we vacuum pack it, and send it to outlets every day. So what happens is that anywhere you eat our item, let it be sandwich or a salad, in any of our outlets you go and eat, you will get the same taste of that chicken. And that is consistency, and that will give more brand value. The customer will feel that, okay, tomorrow I eat at 100 and at any outlet, I will have the same taste. That guarantee, if you are giving, sir, we can establish the brand faster. So I thought this is the advantage of having that kind of a setup.
Yeah, that's true. Whatever you said, that your focus is more to create a brand value.
Yeah.
Here, the inner line of business I'm trying to understand is like, see, sorry, the frozen. See, this is something. It's like we are somewhere else. We are frozening the food and we are doing these things. But
Sir,
whatever the sorry.
So frozen food is a different segment. So that is 14 days, 15 days shelf life. That's why we have central kitchen in every city. It's that day itself. It is freshly cooked, but for transportation purpose only, we blast freeze it. It's not.
What is the yeah, got it. What is the food wastage? See, if you're saying that you don't have a shelf life of that, whatever the food you are daily cooking and you are sending, if it is not sold out in the outlet or it is not, like what is the wastage of the percentages on each outlet we are as of now running?
Industry standard where we want to be is around 1.7%, sir. As of now, we are working at 2.9 to 3.2% between. That is because we are consistently opening outlets, and when we're opening new outlet, the demand projection becomes difficult for us.
Okay, this 3.2 or something, 3.2 or 3.1. Okay, whatever the wastage of this food. Okay, this is charging on the customer, or this is charging on the company, or this is charging on the investors. How it is you are taking this point?
That 3.2 is part of the profit and loss of the company itself, sir. So if I'm saving that 1% over there and getting it to 2.1 instead of 3.1, that 1% additional money is going to come to my bottom line only. It increases the company's profitability.
But yeah, that's also one more area we need to focus. That's how I understood. Yeah. And other thing is like, see, the last slide I did not hear, like what would be the investment plan, because see, I always said that food market is a huge market, and this is focusing only for the Asian market, or this is focusing across the globe?
Sir, we definitely want to focus on the globe itself. We are not, we don't want to stop our growth over here, because as is my first slide itself was like, there is no Indian brand, all are foreign brands only. So we should be one of the first brands which can go from India to outside rather than getting brands from outside to India.
Okay. And what, like, the coming to the investment plan, like how the company is expecting, and what is the projection for the investors? Because I did not hear that one. Yeah.
Hello, sorry, there was some other crossed.
Yeah, I'll repeat the question once again. Yeah, no problem. See, I'm. Yeah, if someone is not speaking, could you please put on mute?
So I think the thing that you're saying is, as of now, sir, we want to by next financial year, that is 2025 March, we want to be at a annual revenue rate of 36 CR. That is around 3 crores per month we want to do. That is the projection with the investment that we raised now. Now we are presently at 1.1 CR. So we would be going 3 CR by next year, March 2025.
Okay. See, this would be like you for the expansion, or this is for the whatever the missionaries or whatever the infrastructure you want to build this amount, or how it would?
Majority of the amount that we are raising this round is a growth round. Majority of the investment that we are raising is for revenue expansion only. It's not going in for know-how and R&D. That has already happened in the previous round where we raised around 6 year. That with that only we built all these facilities. Now we want to make use of these facilities and grow bigger. So majority of the amount that we are using is going to go into revenue expansion only.
Okay. See, majority you were saying that suppose it's a 6 year you want to raise the fund right now.
Yeah, 5.3. Yeah.
5.3. Yeah, make it 6 year. Okay. In this 6 year, what is the percentage of amount you want to go be in the growth, and how much it would be on the other sector?
Yeah, out of the 5.3 that we are using, sir, 1 CR is used for runway and 60 lakhs is used for the central production expansion. So 1.6 if you take out that we are using for our runway and our back end, everything else is going into the front end. So close to 3.7 CR is going into revenue expansion.
Okay, 3.7 would be the revenue expansion.
Yeah, out of 5.3.
Yeah, it would be converting. It's 60% you are using for the growth expansion.
You can say, sir, more than that, yeah.
Okay. What is this runway expansion?
Runway is money that we want to keep with ourselves to sustain ourselves if in case we need more money. So let's say we want to have we have additional salaries, we have additional things. So for that, runway is actually the what do you call for the company operational runway, operational OPEX, you can say.
Okay, operational runway. Okay. See, in the coming to the marketing side, how much market as of now we have been captured, and what is the projection for capturing the market in the 2024 to 2025 financial year?
So presently, our company, we as a company, we are doing according to Swiggy and Zomato, because I don't know the offline market size, but online market size I know, because Swiggy and Zomato track all the details and give it to me. In the health food segment, we have around 15 to 16% of the market share continuously. So after we acquire Farm Bowl, we'll be having more than 25% of the market, and we'll become the largest health food player in Hyderabad.
Okay. This is again specific to Hyderabad.
This is specific to Hyderabad. Yeah, I mean, in the markets that I'm present, my market share is going to be more than 25.
Okay, this is also okay. This is also specific to Hyderabad. Okay.
Yeah.
Okay.
We are opening.
We
are opening outlets in Bangalore, but I would want to comment on Bangalore only after I can see what is happening in Bangalore.
Okay. And what is the investment, and how you are fulfilling our aspirations of the investor?
Sir, I think the minimum investment size, I think Mr. Viraj has told, is around 5 lakh ticket size. And mainly what we are trying to do is, sir, even I'm an investor in the company, as if you see that way. So for me, my revenue or my value of the share is what I want to increase. And if you are associating with this company, by default, I will also be working towards increasing your share value. If you see in the past history, I can only talk about history because I can't predict the future. In the history, we have always continuously grown from 1,200 orders to 37,000 orders. So consistently, we have been performing well. And if history is any guarantee of future, I think we will be working more hard to grow faster.
Sorry, Narendra, because really I did not get the point what I'm trying to ask. As
Hmm.
an investor, if I invest 5 lakhs, okay, what is the returns on the investments you are trying to give to the
Sir,
investor?
investment returns, sir, I think we discussed that actually. That's why I was thinking. So we already discussed that part. It is, if you're saying from the company side, we will be looking for a exit or any other thing only 18 months down the line. After 18 months, we might consider getting acquired by a bigger company. Or if the company is going well and growing good, we want to still continue it and go to IPO, which will be in the year 2027, 2028. So that is one exit. IPO is one exit, and acquisition is one exit. Acquisition we'll consider only in December 2025. Apart from that, if at that point of time, you can look anywhere between 2x to 3x of your investment. That would roughly be I'm expecting that would be the exit.
Mm-hmm. Means 2x, maybe you are expecting on an average of 2x to 3x in December 2025.
Exactly.
That's
Yes.
thing.
Yeah.
Okay. Yeah, that's it from my side, Narendra. I don't have any.
Is there any?
Yeah.
This one. Yeah.
See, in case ఎవరికైనా ఇంట్రెస్ట్ ఉంటే ఫామ్ లింక్ చాట్ బాక్స్ లో ఇచ్చాను సార్. అది ఫిల్ చేస్తే మా టీం మీకు గెట్ బ్యాక్ అవుతుంది. ఇన్ కేస్ దాని క్వశ్చన్స్ ఉన్నా మనం వన్ కాల్ సాల్వ్ చేసుకోవచ్చు. And Narendra sir, thanks for your time.
Yeah.
Okay. And Chevan sir.
Yeah, Narendra, this is sharing the financial documents related to this order.
Yeah, we'll be sharing the provisional, sir. I think provisional of this year, because we just completed the year. We still don't have the audited and everything. We'll be sharing the provisionals with you.
Okay. At least one financial year, it would be more enough to us, like to analysis.
Sorry?
Yeah, one financial year is good. That if you share, that would be easy to get an analysis. Yeah.
Sure. We'll share the current year's financial provisional.
That is 2023 to 2024. That's right.
Yes. Yes.
Thank you. Yeah, that's more than. Thanks.
So I request everyone to fill the form who are looking to invest in Jelly Belly Foods, so that we can understand your requirement. Whatever the documents you require, please fill the form. We'll share the same. I'm posting the form link in the chat box.
So
Please
Narendra,
fill the form.
as you told, this is the growth phase fundraising, right? So far, like how many fundraise has been raised?
We have only raised 2 rounds, sir. Both have been pre-seed round and seed round. And still we are only in an angel investing mode. We are not going for any VC or PE investments as such. 2 rounds, sir. We raised 5 CR. At 5 CR valuation, we raised around 40 lakhs in the previous, in 2019, 2020. And in 2023, we raised at a valuation of 17 CR, we raised 6 CR. Is that it, sir?
Yeah. Now again.
Yeah.
Yeah. Hello.
Okay.
Yeah. Thank you, Narendra Garu, for having a nice session.
Yeah. Thank
Brief
you.
explanation about Jelly Belly Foods.
Yeah.
Yeah.
Thank you.
Thank you so much for joining the session. I'm posting form link in the chat box. If anyone interested to invest in Jelly Belly Foods, you can just fill the form.